Hello there, this is fairbinaryoptions.com. We are looking at Australian dollar US dollar 4-hour chart. Yet again, we had such an analysis or an analysis for the pair something like 2 or 3 days ago. This is the 5th of January, as you can see, 2014, and we are preparing for heading to the next trading week, and therefore we are looking at the bigger time frames. Now this is not such a bigger time frame as one may expect. It is a 4-hour chart though, but it is zoomed out so we can actually analyze this move. Now this move to the downside looks like an elongated flat and elongated zigzag, and elongated zigzags appear again only at the beginning of contracting triangles or at the end of expanding triangles. Now because of this, I would say that our first 5-way structure starting from here on the right side would end here. So this would be wave A, then we have a B wave to the upside. Now in order for this to be considered a zigzag, the B wave to the upside should retrace at least 1% of previous wave A. So as you can see, wave A is ending here, the B wave ended here, so this rule or this condition is satisfied. This as an individual pattern, this is being considered an irregular failure, and here we have a classical impulsive move, 1, 2, 3, 4, and with the 5th wave to the upside, to the downside here, and therefore A, B, and then a C wave to the downside. But any zigzag travels with a structure being 5, 3, 5, so we still need a 5-way structure to the downside here of a lower degree, and in our case here I would say we have a first wave extension, and the first wave extension means that the wave that started, so the wave that started here from this moment of time would be 1, 2, 3 to the downside, and then the 4th with a contracting triangle, A, B, C, D, E. So that would be our contracting triangle. Let me try to define it a bit better for you. Like this, A, B, C, D. As you can see, price now is broken, or the triangle, it is broken. It is retested now, and we are looking for, of course, a rejection out of these levels. So our impulsive move to the downside for the 5th wave there, so this to be the 5th wave and this to be A, B, C, D here, A, B, C, D, E, the 4th wave done here, a 5th wave to the downside, and then we're looking for price to go to the upside. Now why is this important, and why is this being called an elongated flat? So the whole structure that started on the upper left side here to the lower right side here, this should be considered an elongated zigzag. Now all this elongated zigzag should be formed out of 5, 3, 5 structure. So this should have the following 5-way structure here, then another 5-way structure for the C wave, and of course a 3-way structure for the B wave. Now for the B wave, it's clearly that we have it is clearly that we have an irregular failure, like a flat. So 5, 3, 5, A, B, C to the downside, and the reason for that to be considered an elongated flat stays with the C wave. If the C wave extends or goes or travels more than 161.8 when compared with wave A, and put it on the bottom, in this case of wave A, then this is being called elongated zigzag. So let's just measure that from the highs here, like this, from the highs to the lows. We are looking for 161.8. Let's measure the 161.8. This is the 161.8, and if you take this this measured move and you put it attention, by the end of wave A here, you are seeing that price actually extends more than this wave for the end of the C wave. Therefore, this is an elongated flat. This is important because elongated flats appear either at the end of an expanding triangle or at the beginning of a contracting triangle. This is no expanding triangle. So the whole move, ABC, should be considered and interpreted as being a leg of a contracting triangle. I would say it is a B wave of a bigger degree. Now, if this is a B wave of a bigger degree, it should also be noticed or remembered that such a pattern, an elongated zigzag, is always, but always, retracing more than 61.8 when compared with the C wave. So the next thing to do is to measure the length of the C wave. From the highs to the lows and look for 61.8. Now 61.8 comes, as you can see, 0.9216, and this is mandatory to come for the Australian dollar US dollar minimum. As a leg of a contracting triangle, they travel also beyond 70%, even 80%. So I would say that from this moment of time, depending on the structure we'll have, I will look to buy put options. But until then, and especially on this breaking of a triangle and then retest it, I would really like to buy call options by the time markets are going to open in let's say a couple of hours in Australia and New Zealand. I would like to buy call options with end of week expiration date. So we want end of week after the NFP on Friday. So buying call options end of week expiration date is the logical thing to do on the Australian dollar US dollar trade. First thing to do on the opening on Monday. Thank you for being here. This is fairbinaryoptions.com, and remember, all of our analysis here are possible due to the help of our sponsor, official sponsor, Lionknife. So make sure you go and check lionknife.com and see all the offers and possibilities we have there. Again, have a great day and see you tomorrow. Bye bye.